Join the Bucketlist Accountant himself, David Patterson, as he discusses profit, cash flow, and the emotional drive behind financial goals in business. He talks about the challenges and the importance of consistent profitability and the role of a knowledgeable team member in understanding financial numbers. Tune in if you want to learn about achieving financial stability, a purpose-driven approach to growth, and how to navigate the impact of external factors like the unexpected. I'm your host, Anthony Pearl. Let's get into making your bucket list happen.
David, I wanted to speak to you about profit. Okay. I think that we touch on this in other episodes, but profit, I think, is something that is misunderstood. What it actually is. So maybe as a starting point, talk to me about, in very simplistic terms, what is profit?
Gee whiz, taking me. I mean, profit at the end of the day is your sales, whatever you've generated in the business, your revenue that you've generated, less the expenses that you've incurred in the business. Effectively, in a nutshell, will give you your profit.
What it's not, of course, is how much cash is in the bank.
No, and it's one of the hardest things for people to understand, because when you prepare a set of financials, for example, to prepare a tax return, and you'll tell a client that they've made $150,000 profit, in a lot of cases, their first inclination is to say, well, I can't have made that much money. I can't have made that much profit because I don't have that money in the bank. So then it becomes an exercise of getting them to understand the difference between profit and cash and the link between the two. It can be at times a very difficult conversation, but you can be extremely profitable and have no money in the bank.
Yeah, talk to me about that, because I no doubt you've encountered that on many occasions where exactly that scenario where there's no money, but it's profitable.
Yeah, so in a lot of cases, what will happen is that you'll show a good profit on your profit and loss, but if your customers take forever to pay you, then that profit doesn't necessarily reflect money in the bank. So if you're in a situation where you do the work for someone and then send them an invoice to be paid, now if they don't pay, if they take 30, 60, 90, 120 days to pay, then you'll be showing a profit. But because you haven't got that money in, because they haven't paid, you don't actually have that money in the bank account. That then creates issues, because that creates a massive flow-on effect, because if you're not getting paid, potentially your ability to pay your suppliers becomes affected, and it just creates this wave of stress and uncertainty.
And I think there's also an important part in what you're saying in there is the payment of suppliers. It's a tricky balance there as well, isn't it? Because that impacts cash flow depending on when you get paid and when you want to pay and when you should pay, which may also be a different thing,
Yes.
suppliers.
Well, that's right. And most business owners, they want to pay their suppliers on time. They hate having bills that are outstanding. But in a lot of cases, they're dictated to their ability to be able to make those payments based on when their customers pay them. So one of the important elements that you have to build into your business is a robust system that will allow you to chase that money from your customers regularly and effectively.
Yeah, and that's an interesting challenge, isn't it, for a lot of small businesses, being able to do that?
I would suggest it's one of the hardest elements of running your own small business, especially in a small-ish business, because if you're the one as a business owner who's doing the work and sending the invoice, and then you're the one that's chasing the money, it can be a hard relationship to maintain, going from the person doing the work to the one chasing the money, because it creates a different relationship. So you're wearing two hats focused at the same person. And I think one of the things that I've seen work the best is the sooner that a small business can move that money collection away to somebody else, the much easier it becomes.
And I think it's also, something that we referred to in a previous episode. It's a time saver as well, because it's not an effective use of someone's time to be chasing those bills for many reasons.
Oh, absolutely. And I mean, the other thing it does as well is that if the client does ring you as the business owner and says something about whoever's chasing the money, it gives you the ability to deflect it off and not affect your relationship with your customer. So it's a pretty powerful element of the business once you can get to that point, because it doesn't ruin your relationship with your customer.
I'm sure you've found it as well with businesses you deal with. Sometimes you have to learn that lesson the hard way. I certainly have, client in the past that ended up going bankrupt and owing me quite a bit of money. And of course, the banks and all the other creditors get that and I don't. And what was interesting about that process was, in hindsight, that if I had in place the system that I have in place now with someone independent looking after it, then I wouldn't have found myself in that situation where they owed me as much as they did. They might have still owed me a little bit, but it would have been a fraction of what they ultimately did owe me. And I know I had another client, this was again a little while ago, that was in a situation where the business wasn't going as well. They were appealing to me emotionally to let the invoice slide. Having an independent person in there enabled them to put a payment system in place. They paid it off over, I think it was like 18 months, which was totally fine, because I'd have rather had that money coming in than not have it at all.
Yes.
And having that independent person definitely paid for themselves.
Oh, absolutely. Absolutely. Because it just creates that different dynamic. They can have a different conversation than what you can have with them in relation. And in a lot of cases, it becomes less emotional. Like you as the business owner chasing money from a client, it becomes emotional because it's your money. You want it. You've done the work. So it adds an extra element of angst into the conversation, I think. If you can employ someone or engage someone to do that for you, it just becomes part of their job. They're less emotional and can be more rational in coming up with solutions with the customer to get the payments.
Coming back to profitability, how important, and this may seem like a silly question, but I think it is an important question. How important is it to always be profitable at any given point in time? Because many businesses take some time to be profitable.
Yeah. And look, you're always going to have, well, not always, but startup in particular, it can take a little while to build up. But once you've created a reasonably established business 3 or 4 or 5 years in, the benefits that you get from being consistently profitable are, many. One, generally, if you can be consistently profitable, then your cash flow will become more consistent. So you iron out any of those peaks and troughs that you might have from a cash flow perspective. Down the track, a prospective purchaser of your business will look more favorably if you've got consistent and good profits. Consistent from a personal perspective, it creates less stress on you and your family because you're not worrying about what you have to do to get more profit. Getting more profit just becomes a decision of choice rather than necessity. So it just makes the whole process and the whole journey much more enjoyable.
This podcast is brought to you by Bucketlistaccounting.com.au. Speak to David Patterson and his team if you want to take better control of your life and business, helping small business owners like you be successful designing the life of your dreams. Go to Bucketlistaccounting.com.au or check out the show notes for more information. Now back to the program.
Yeah, and but it is something you can work towards, isn't it? I mean, I think that's the challenge here and I think we talk about businesses, after 3 or 4 years in business needing to be there. But also what happens in business as well is they make some changes. Things happen in the world as we experienced with COVID and businesses completely change the way they're operating. And even though they've been established for a number of years, they can find themselves in a situation where effectively they are like a startup, and having to, get into profitability can take some time. So it is
Yes.
something that you need to carefully manage though, isn't it? To make sure that you're on that right trajectory and that you know what you're investing in is going to ultimately manage.
Absolutely. And that you're making decisions within your business that that you can control and that you can work towards to improve your business so that you can build it into a robust entity, so that if something like COVID does happen, and I mean, you just can't predict that kind of thing, but if you've built a nice, robust, profitable business over the way through the decisions you've made, then you've got a much better opportunity to, one, adapt when something comes out of the blue, and two, it gives you the opportunity to ride through whatever happens, and gives you a greater ability to come out the other side and continue to trade on at that point in time.
I think the other thing that's important, isn't it, when it comes to profitability, if you're in that situation where you're not profitable, it means that the money's having to come from somewhere to support you over a period of time. So that's that in itself brings its own challenges, right? Where does that money come from? Do you borrow the money? Is it actually a borrowed from your own personal savings, for example, versus borrowing it from an institution? Those things have to be taken into consideration as well, don't they?
Oh, absolutely they do. And there's always going to be those times and moments in a business where things haven't gone according to plan, and you do have to make some, I guess, almost sacrifices. So it's either borrowing money from a bank that you'll have to pay back at some stage for a purpose that's not about growth, it's about sustaining your business, or you start to make a drain on your personal expenditure. But I think that then also comes back to your knowledge and understanding of where you're spending your money and how you're spending your money, and making sure that you're making those decisions where you are profitable, that you are building like almost a war chest of funds that you can call on if needed, that affects you less than if you haven't sort of tried to think about worst case scenarios.
I want to bring it back to our bucket list, because profitability and the bucket list do have a relationship, don't they? Because you may, the obvious is I just want the business to be more and more profitable all the time. I'm making 100,000 next year. I want it to be 250,000, and so on and so on. But having a bucket list keeps that in, it gives you some perspective, doesn't it, as to what, whether more is the right thing, or whether it can be a bit of a compromise, or whether indeed it needs to be even more than what you thought.
Yeah, I think one of the important aspects of that is I've seen over the journey, like a lot of ads for business coaches, a lot of ads for where what they're talking about is making your business more profitable. But I think where that becomes more achievable is if you understand from the business owner's perspective why they want to become more profitable. Like if your goal is to make $500,000 profit, if you don't have a purpose behind why you want to make that $500,000 profit, chances are you probably won't achieve it. If you build a purpose behind the $500,000 profit, then you create an emotion around the $500,000 that you wouldn't have otherwise. That then allows you to make better decisions because you know why you're making decisions. You know why you're targeting the 500,000. It might be you want to buy a brand new house. It might be that you want to help your kids through uni, or you want to, whatever the case may be. If you can create that emotional link to the growth, it becomes more achievable. More likely to be achieved.
I want to kind of bring this back to where we started this conversation about profit and talk to the people out there who still are struggling with the concepts, right? When it comes to profit, and it comes to cash flow, and it comes to all of these other things, and we hear about various terminologies, EBITDA, and et cetera, that you hear in accountants talking about all the time. how important is it for a business owner to really understand some of those things versus having someone like yourself that can actually just bring that in for them? Because, there is this kind of push that you need to understand all these things, but there are plenty of people out there who just can't get their head around those concepts. And I'm sure you have plenty of those people on your client list that fall into that category.
Yeah, absolutely. And it's a very interesting question. I think from a general concept, I think if a client can get I don't think they need a detailed understanding of the numbers and a detailed understanding of what everything means, profit and loss and balance sheet kind of thing. I think they need to have an overall understanding. But if they're working with someone that does understand the numbers, then it becomes more it becomes more a case of the movement and the achievement that the business owner gets from improving the numbers. So they don't need to understand what $500,000 profit necessarily means. They need to understand what hitting $500,000 profit does for them. So it could be whatever it is for them that they want. And this is probably contradictory to what a lot of people will say, but I think it's less about them knowing the ins and outs of the numbers and more about them understanding what the numbers will achieve for them. And I think they're two different understandings.
Absolutely. And one is a much more emotive and purpose-driven, as you say.
Yes.
And that's something that I think everybody understands. This is getting your head around how the numbers actually work. Where it is a difficult thing, and not everyone has an accounting brain.
No. And I think the key is that making sure that within your group or within your team, whatever that team looks like, that you've got someone that understands the numbers, because they can then work with that to make sure that they understand the drivers of the numbers. But it doesn't necessarily have to be the business owner, but they do need someone working for them on their team, on their side, that understands the numbers.
Yeah, and I think that's a very important bit of advice, because it is about bringing someone on board, and that could be an external person, an accountant such as yourself. But it is about having someone as part of your team. And I think that's an important point, that just perhaps to finish up on, is that there's a difference between sending your accounts out 3, 4, 5 times a year, whatever it is, for someone to blindly kind of do, versus having someone that is part of your team. And that's what, the bucket list is all about, and as well, isn't it?
100% it is. Clients that I work with, we talk about we all the time when we have meetings. These are the targets we're setting, and you do become part of it, and you do get to enjoy the results that they achieve, and it does create a much closer relationship between me and clients, rather than just doing a BAS or doing their tax return. And it's a relationship that works.
The Bucketlist Accountant podcast is brought to you by David Patterson and his team at Bucketlist Accountant. Go and visit their website for more information, details of course in the show notes. I'm Anthony Pearl, your host from Podcast Done For You. We look forward to having your company in the next episode.